Hey, well, mortgage rates are absolutely plummeting. They're crashing. No, just kidding. They're actually surging. They're surging and soaring. And now today, when I look at the average daily fixed mortgage rate, 6.97%. So that's one of the reasons why we're not seeing a lot of people buy homes. And you combine that with the tariffs and just the economic uncertainty of a recession. You wrap up all that into a ball, and what do you get? You get, well, quite frankly, you get a lot of uncertainty. And uncertainty will no doubt kill buying decisions of any sort, including homes. And so that's one of the main reasons why nobody's buying homes right now. But today on the Housing Nerd, welcome. Good morning, by the way. We are going to dissect the housing market using the latest Redfin data. And yes, some extraordinary things in the weekly housing market data. It's always changing. We're also going to give it kind of a different look. We're going to, we may look at some 4-week rolling averages, but we're also going to look at some historical averages with not only national data sets, but also metro sets. So if you have a metro that you want me to analyze, drop it in the comments and I will get to it in the second half of today's live. And if you just have a question about the housing market or you want to talk about the housing market, this is the time and place to do it. This is a informal just informal chat about the housing market. So anyway, my name is Jason Ferrier. I am the Housing Nerd, and I'm a realtor. I'm an investor. I've been doing it now for the last 7 years in Central Ohio. And again, I appreciate you joining me today. Come and go as you please. Stay as long as you want. And we're going to talk all about the housing market. All right. So, and it's a little cold, so I apologize for the sniffling or sneezing or whatever, but it is a little chilly out here. It's about 40 degrees or so. Hopefully my heater that I have running is not too loud. If it is, drop it in the comments and tell me, Jay, your heater is too loud. But I ran out of gas in my little fireplace, so now I'm forced to use an electric heater. Anyway, all right, let's jump into the latest Redfin article. So this article is called Home Buyer Demand Improved Last Week. It did, but tariff turmoil, rising rates, and economic jitters likely to hamper sales. And Redfin, of all people, who is, you know, forever optimistic, they are like, hey, buying demand has come back a little bit, but overall it's down, and it's probably going to get worse because rates now are near 7%. Earlier in the week, they were like at what? Like, again, like if we go back to this tab, just real quick, if we look at the mortgage rates, like these things were, I mean, you could see, well, it's not going to tell me on every day. I'd have to go back and look at the daily. But like this rate got to like 6.5355. I think the mortgage rates did at one point over the last week. And now they're 6.97. A couple of days ago, they were up like 20 basis points in one day. So there's no doubt that mortgage rates are really volatile, as is the stock market. By the way, as a housing nerd, I invest mainly in the housing market. However, I do have some money in the stock market. And yeah, it was a tough week, mainly because I invest in, I kind of do the index stuff. Maybe that's a lazy thing to do, but I do the indexes with stocks, and I got stopped out on an inverse ETF. So I went in with the inverse 2x leverage ETF for the NASDAQ and the S&P, and somebody leaked that goofy news a few days ago, and like I got stopped out immediately. And then guess what? It ended up down. The market ended up down for that day. So I would have made money if I'd have stayed in, but I got stopped out because of that rumor. Anyway, that was a frustrating day. We'll just say that. All right, so let's do this on the housing market. Here we go. All right, so this is the latest Redfin article. I'll link it after I'm done with the live below, but you can just obviously Google it and go to redfin.com. All right, so they say pending home sales and mortgage applications improved a bit at the start of April. But since then, the back and forth on President Trump's new tariff policy, rising mortgage rates, and the increased odds of a recession are likely to push down home buying sentiment. And comment below, I want to know from you, are you thinking that home buyers are going to back off of the housing market? Or are you thinking, you know, I think they'll come back this spring? Lower rates certainly help demand, but higher rates don't help it. The housing market is under pressure as prospective home buyers and sellers navigate a rapidly shifting economic landscape with President Trump's tariff policy, a volatile stock market, no kidding, and an increased chances of a recession, exasperated widespread financial uncertainty. And again, uncertainty is not what buyers want in the housing market. That's just not what they want. Hold on one second. I'm going to move this heater because it's kind of loud. Hold on. Okay, I'm back. All right, so home buying demand improved at the start of April. Mortgage purchase applications rose 9% during the week, ending April 4th on a seasonally adjusted basis. Pending home sales posted their smallest decline since the start of the year, falling just 1.1% year over year. However, that's partly due to a holiday effect, with Easter falling into the comparable period in 2024. So last year, this is important to keep in mind when you're looking at this data. Last year, Easter fell this week that we're in right now. I'm sorry, last week. So because of that, you're going to see an increase in buying demand. You're also going to see an increase in, mortgage applications, pending sales, all that stuff, because people were out buying this year and doing things, but last year during Easter, obviously not. So that's what's going on there. But those numbers reflect what's happened before and in the immediate aftermath of last week's initial tariff announcement, when mortgage rates dipped to a 6-month low and gave buyers a brief reprieve. There were buyers probably that were like, hey, it's time to buy. In fact, when mortgage rates fell like they did, like fell quickly, I had a couple listings where I immediately saw a increase in activity and got a couple offers. So like mortgage rates dipped and I got an offer. I'm guessing maybe they were ready to lock them in. That's my thought. But I don't know. Comment below and tell me what you think. All right. 1 minute. I just need to take care of something. All right. So the improvement in demand is unlikely to last. That's what I'm saying. Like Redfin is usually not like negative, but they're realistic, at least, was good. The improvement in demand is unlikely to last. Mortgage rates have since soared, jumping on April 9th to 6.95%, their highest level in 6 weeks. The bounce is due to economic turmoil and the Fed making it clear it's not cutting interest rates more than previously expected. Even before mortgage rates bounced back, the median monthly mortgage payment was at an all-time high of $2,813. Payments are likely to rise even more in the coming weeks, and that, along with economic instability, may scare off more prospective buyers. And I thought this part was pretty telling. I haven't heard this from a buyer or a seller yet, but you never know. I could soon. Tariffs are coming up for the first time. I hosted an open house over the weekend, and some of the younger buyers were concerned about how they're going to impact the housing market, said Desiree something, a Redfin premier agent in Detroit. They're hearing the words tariffs and recession, and it's making them nervous that if they buy now, the value of their home will decline, and they don't know whether mortgage rates will go up or down. There's a lot of uncertainty out there, with buyers trying to understand how their purchase would fit into their personal finances and the broader economic puzzle. So let me know what you think. Like, is now a good time to buy a house? Well, that's a bad question. Um, what factors are keeping you, if you're thinking about buying a house, what factors are keeping you from doing that beyond the high prices, right? High prices is the easy way out. Uh, but is like the economic uncertainty something that is keeping you from buying? I mean, let's be honest. There's always economic uncertainty, isn't there? Like, isn't there always like uncertainty in the world? I don't know. It seems like there is. New listings are rising. Pending sales are falling despite more homes being listed. You'll see that today too. A lot more new listings, unless you live in Columbus, where I am. There are new listings are falling, unbelievably. Pending sales are falling despite more homes being listed for sale. New listings are up 10.3% annually. That's one of the biggest increases in nearly a year. Supply is up partly because many homeowners who have been considering selling are listing now in hopes that they're able to pocket their equity before a potential economic downturn. Also note that there's a holiday effect. Easter fell into the comparable period in 2024, while the holiday hasn't happened yet this year. The only thing that's certain about mortgage rates and the housing market right now is extreme uncertainty, said Redfin economic research lead Chen Zhao. With the White House going back and forth on tariffs, sending markets and rates reeling, Americans are feeling uneasy about their money. Nobody knows what will happen next. Do we ever know what's going to happen next? I don't think we do. If anything, that this week proved that. It's likely that the financial anxiety, rapidly changing economic news, and the rising chance of a recession freeze the housing market. But it's also possible that economic turmoil pushes down mortgage rates and or people decide to bite the bullet now instead of waiting for conditions to perhaps worsen, encouraging home buyers and sellers to jump in the market. So basically, like, nobody knows what's going on. Cats and dogs living together. Mass hysteria is in the economy and certainly the housing market. All right, so now we go to the leading indicators, and this is basically like they're indicators of home buying demand and activity. That's really what this is about. But yeah, let me know what you think about this economic uncertainty and the housing market uncertainty. The whipsaw in mortgage rates was crazy this week. There's no doubt about that. There's no doubt. All right, let's look at some home buying demand. Daily average 30-year fixed mortgage rate now stands at 6.95% as of April 9th, just 2 days ago. That's up from 6.6% less than a week earlier. But unbelievably, that's down. That's down. Mortgage rates are actually lower right now than they were this time last year. Can you believe that? Yep, that's true. Weekly average 30-year fixed mortgage rate, 6.64%. We don't really care about that much, but mortgage purchase applications, how many people are actually applying for mortgages right now? Check this out. Now, remember, we've got Easter involved last year, so this isn't apples for apples. This is more like apples and oranges. Up 9% from a week earlier. So if you compare it to last week, we are up 9% in mortgage applications, but I think that's because rates dropped. Rates matter, folks. Like, there's a lot of people that want to pretend that rates don't matter, that, like, I think they're just hopeful. Like, they have a lot of hopium, right? That, hey, buying demand won't come back and the market will crash. Prices will crash because nobody's going to buy a house even if rates come down, because price is more important than rate. While that may be true in some situations, that's not how the American consumer buys. They buy with interest rates. That's what they do. They buy on payment. So it's foolish to think that if rates fall, buying demand isn't going to come back. I'm not saying it's going to skyrocket and like people are going to run out and always buy houses or buy a ton of houses. Like, it's not going to be, 2021 or 23 anymore, but it definitely makes a difference. I mean, it does. Like, it's just how it is. Mortgage purchase applications, though, are up 24% versus this time last year. But again, we've got that Easter thing. So it'll be interesting to see how that changes once we're kind of past that Easter time. Touring activity. Look at this. Up 39% since the start of the year. That makes sense because start of the year was January when it's a frozen tundra. At this time last year, it was up 32%. So I guess we're up 7% with the amount of people seeing homes. Not that much of a difference. I hold open houses like every weekend. I can clearly tell you the traffic is down. Any realtor who's telling you that the buyer traffic is strong is not being forthcoming with themselves, or in my opinion, you, because the buyer traffic is down. There's no doubt. Google searches for homes for sale. People typing in Google, home for sale, up 10% from a month earlier. So I guess people are looking for homes more on Google, and it's up 10% more than this time last year. Again, not that much more, right? Not that much has changed. You've got interest rates are high. Prices haven't come down for the most part. In some markets, they're coming down. But I'm not hearing about a lot of people getting deals yet. I'm just not. Maybe you got a deal. Did you get a deal? Let me know if you did. Some people got deals. Some people are. But they're the ones that are willing to make a disrespectful offer. They're the ones that are willing to be patient. And they're the ones not looking necessarily for a move-in ready house that's like everybody wants, right? If it needs work, that's the type of house you want to go after. All right, now we look at the metrics, national metrics that include the top 400 metros in the U.S. And this kind of tells us the top line numbers with price and inventory and all that. And then after this, we'll get to some charts on the national stuff. And we're going to look at some historical numbers going all the way back to 2012. I think that'll give us different perspective. Then we're going to look at metros. So that's how this will go. And obviously, anytime you got questions, throw them in the comments and I'll get to them. Median sale price, $386,500. That's up 2.5%, but that's the smallest increase since October 2023. So the median sale price, the home in the middle, is the median, and that's up 2.5% to $386,500. There are a lot of people that thought this would crash and burn, like they said it would happen 3 years ago, 2 years ago, 1 year ago, 6 months ago, 3 months ago. But the median sale price continues to beat last year, but that spread is decreasing. Median asking price. Look at this. This thing keeps going up and up and up. In fact, there's somebody that I follow on YouTube. You may as well, Melody Wright. And she said one of the main indicators of how this home selling season, the spring selling season would go is median asking price. She says if median asking price can decreases, then you know that the prices are going to change, obviously. So watch median asking price. In fact, her prediction was median asking price would decline at the beginning of the year. That hasn't happened. So she's still waiting on median sales price, median asking price to decrease, but it hasn't yet. I mean, it's just going up and up and up. So either people are still being greedy when they ask, when they're listing their homes, or it's just more expensive homes being listed and not affordable homes, which is what we need. We need more affordable homes to be listed. Median monthly mortgage payment, $2,813 at a 6.64% rate. Well, and that's not the rate now. The rate's 6.95%. But this is a record high. Like the mortgage payment now is at a record high, and that's at 6.64%. So now it's 6.95%. It's definitely a record high. Like it shattered the record for a mortgage payment. I mean, we're approaching $3,000, folks. $3,000. Nuts. Pending home sales, 85,764, down 1.1% year over year. That's the smallest decline since the start of 2025. So the spread of pending sales this year versus last year, we've been down significantly month over month, or I'm sorry, month after month. But now we're starting to see that change, and pending sales are starting to tick up a little bit. But overall, most people aren't buying homes. They just aren't. New listings, 100,661. That's an increase of 10.3%. That's a big increase. So we need that. We need more new listings to add to supply. However, look at this number. Look at this number. Now, there are people that may say this number is fraudulent, corrupt, but I'm not one of those folks. I can only trust the data I have in front of me. I don't work at Redfin, and I'm not a wizard. So active listings, 984,949. That's an increase of 11.4%. This number, 984,000, is not a lot. Not a lot at all. In fact, this is struggling to get above and stay above 1 million listings. Do you think we'll see more active listings this year? I mean, at the end of this year than we are right now? Like, will we see 1.5 million active listings? I don't know. But like, this number is really struggling. It is. Months of supply, 4 months of supply. That's basically a factor of how many homes we have on the market versus how fast they're selling. Share of homes off the market in 2 weeks, 39%. That's down only 2 points, though, from 41%. So we still have 39% of all homes are selling or coming off the market in 2 weeks or less. Meaning homes are still kind of moving. You know, they're not on the market forever. Median days on market is growing, though. It's up 43 days, or it's 43 days. That's up 6 days year over year. So, you know, homes on average, or I guess the median days on market, not average, is 43 days. So, you know, if you're listing your home, you need to check that in your local market and find out what this number is. If you don't check this or have your realtor check this, that's a big mistake. I mean, you got to look at how long it takes homes to sell in your area, in your price point, and down to like the school district level, because that's a big factor. If you have, like here in Columbus, if you have $1 million home, it could take you 6 months, 9 months, 12 months to sell the house, because this isn't a market that sells $1 million homes every day. But if you have a $250,000 home, like I listed one a few weeks ago at like 270, we had it in contract within like a week and a half. So, you know, if you have an affordable home, you're going to see that thing move in most cases. But an expensive home, not so much. Share of homes sold above list price, 25.1. That means a quarter of people are still paying over asking for homes. I just got an over asking price, I just got a offer over asking on a listing. And we had multiple offers. And it was an affordable home. So that's still happening. Down from 28%. But people are still paying over asking 25% of the time. Average sale to list price ratio, look at this. There you go. Whoops. Price reduced, right? Price reduced. 98.6% average sale to list price ratio. All right. Now we'll look at some of these metros. This is state level data or metro level data for the top 50 metros in the US. We're going to dive into some metros in depth in a little while, but right now, just kind of an overview here. Median sale price. Where did median sale price increase the most? Cleveland, Ohio, Milwaukee, Wisconsin, Newark, New Jersey, Nassau County, New York, however you say that. I'm not from New York. New Brunswick, New Jersey. Like the Northeast is brutal with home prices. So is the Midwest, by the way. Like, look at this. In Cleveland, home prices year over year are up 12%. Mainly because maybe like the median sale price in Cleveland is like 200 grand. Maybe that's why. Where did they go down the most? They declined in 8 metros, by the way. Median price did. Indianapolis, Jacksonville, Montgomery County, PA, Dallas, Tampa, Florida. Pending sales. Where did pending sales increase the most? Montgomery County, PA, Cincinnati, Ohio, the nasty natty, Pittsburgh, PA, Warren, Michigan, and Baltimore, Maryland. So the East definitely has, it feels like it has more activity with pending sales than the Midwest does. They have, some good activity too, but some of those popular markets, traditionally popular housing markets, are suffering. Look at this. Pending sales in Miami down 17%. Holy shnikes. Fort Lauderdale, Florida, down 16%. Las Vegas, Nevada, down 13%. Houston, Texas, down 12%. West Palm Beach, Florida, down 8.7%. So Florida's struggling. I mean, they're on the struggle bus when it comes to a slow market. New listings. Where did new listings grow the most? Phoenix, 25.9. That's a big increase. Look at this. Washington, D.C. What does that mean? It means that maybe a lot of people are like, man, I don't know what's going to happen to my job. I depend on the government for my employment, either as a contractor or they're directly employed for the government, which, there's a lot of folks that are, and certainly in Washington, D.C. So I better list my home. New listings up 25.8%. If you're a buyer who actually wants to buy in Washington, D.C. or Phoenix or Montgomery County, PA, or Pittsburgh, or even Cleveland, you may have some opportunities because there's a lot more new listings. Maybe it's time to go out and make a lot of disrespectful offers, right? Like the house is listed at, 400 grand. Maybe you make an offer at 350, 325. Something nutty. San Antonio and Columbus, Ohio. Hey, where I live, kind of. Down in new listings. Excuse me. Down in new listings. So, I mean, I can't believe Columbus is down with new listings, but they are. I mean, the fact is that a lot of move-up buyers are just not buying. They're like, I'm not going to sell my affordable home and move up into that nicer home. Not happening. That's just how it is. All right, so let's look. This is like a quick look at, well, you know what? Let's do this with, let me check a comment and then let's look at some historical numbers here. Joe Mama, what's up? People are worried about catching a falling knife. Right. I get that. Yeah, they're worried about that. I guess it depends on what you want out of a house, right? If you're like the type of person that checks Zillow like every other day, like you're checking the stock market, right? Like every day, like every minute. You're like, did my home price go up? And then if it goes up, you feel like wealthy. Then maybe you should be concerned about a falling knife. But like, if you just want a house to live in and you have the budget for it, you've planned it out, you have your slush fund, and you have an emergency slush fund backing up your slush fund, and you have proper finances in line, and you're patient, and you go out and find a house that needs work. You don't go for that move-in ready house that everybody goes to with the granite counters and the gray floors and the white walls. Do people still do that? I think they do. Then I think, you catching a falling knife is relative. Like if you're going to stay in your house for 10 or 15, 20 years, does it really matter if it goes down 10%? Not really, as long as you can afford it. That's my opinion. But I get your point. Joe Mama. Booger Eater, what up? I would pay more on taxes and insurance alone than my current rent. Yeah. Why would I buy when interest rate on my down payment sitting in a money market offsets my rent? I live free on interest. I just give up space. Absolutely agree. Absolutely agree, Booger Eater. Like you, I love that name. It just makes me giggle. I don't know why. Again, I said this last week, but like everybody had somebody in their class who ate boogers. So hopefully that wasn't you. Yeah, but like you're right. When you look at the money, if buying a house is not important to you, if you're like, I don't need a house, I don't want to mow the lawn. If a tree falls down, I don't want to cut it up. I certainly don't want to worry about a leaky roof. What and by the way, homes are expensive right now and interest rates are higher. And you've got money stashed aside enough that's generating your rent every month in a money market. And the Fed doesn't seem like they're going to cut interest rates a lot this year, which means your money market will be, you know, I mean, like with Robinhood Gold right now, you earn, I think it's at 4, or is it 4.25? I think it's 4% right now with Robinhood Gold. And you can take the money out anytime you want. It's in your bank account in a day. Like, it doesn't make any sense maybe to buy a home at that point. I agree. You're doing the right thing, probably, as far as I'm concerned, based on what you said. Yeah, what's the point? Right? All right, so let's do this. Let's let me just clear these out. Sorry. So this is something different. Usually we do a 4-week rolling average of like of a look on the housing market, but we're going to go back all the way to 2013 today. And I don't know if this will help people or not. I don't know if this is confusing, but comment below and let me know especially if you're watching this on the replay, because most people do when they watch it. That's when they are watching it. So right now, median sale price. Now, this is for all metros. During that article, they had the median price at like $386,000. But nationally, if you combined all markets, and that 386,000 was only the top 400 markets, only the top 400. This number is all markets. Redfin has that number at $426,000. So that's why that's different. But this gives you a historical perspective as to where these metrics have gone over the past few years. And by the way, we can break this down like any way we want. Like I can look at condo, I can look at multifamily, 2 to 4 units, I can look at single family, residential, I can look at townhouses. So it breaks it down a lot more, and it goes further back than just the last few weeks. But if you look at the median sale price, and this thing, I mean, if you drew a trend line, it continues to go up. Like it's gone up a lot since 2012, right? I mean, we're at 426 right now. Where did we start? $159,000 back in January of 2012. 159 grand. Holy shnikes. Now, 426. We actually did come down like in 2022. We came down a good amount. Like we peaked at 432 at one point. And then we actually went down all the way to 382 in January of 2023. So we fell a good amount. In fact, a lot of markets peaked in 2022. And you'll see that in a minute. And then obviously we continued our run back up. But like, even though we're at 426 right now, that's not a high, is my point. The high, according to Redfin, was 432. So people are like, hey, when are home prices going to come down? In a weird way, they kind of have. That's the crazy part. But when you look at that smaller chart of just the last 4 weeks, you don't see that. You're not seeing that number. Or just the last year, it's kind of hard to see. Anyway, I hope that helped. All right, let's do this. Let's look at pending sales. So again, this kind of gives us a different look. So pending sales right now, or home sold, I guess, is what they call it. They call that home sold? No, that's not right. Yeah, pending sales. 422,000 units. That's in 1 month, though. 1 month, 422,000. I mean, you could see where we were. Look at back in 2020. In 1 month, 831,000 units in June we sold. Wow. And this is not seasonally adjusted, by the way. I'm going to go back to this. I don't like that chart, the way that's presenting to me. Hang on one second. Let's do this. Let's go back to this. This will help me out a little bit. All right, this is a little better for our purpose of just the next few minutes. Pending sales, 85,764. That's over the last 4 weeks, but that's down 1.1% year over year. But you can see when we go down to that chart, that historical chart, like, I mean, right now we're not at like all-time lows, but we're definitely low, and people just aren't buying. They're just not compared to what they normally do. Let's see. Let's go to new listings here. Look at new listings. 475,000. That was as of February, but still low. And then if we look at a weekly chart with new listings, maybe I'll just stick on the weekly chart. Probably easier for you to see. 100,000 new listings, right? So that's good, but it's not a 4-year high. That's what's crazy. Look at back in 2022. That's when prices were falling. We already saw that. We actually had more new listings in 2022 than we do right now. This is where you're going to see the distress, by the way, folks. This is where you're going to see those people that need to sell, not want to sell. Right now, you have a lot of want to sell people. In other words, people that put their home on the market with wish pricing. Like my neighbor, for instance, if my neighbor sold at 500 grand, I'm going to put mine on the market for 550 because I have a better home. Excuse me. By the way, everybody thinks they have a better home than their neighbor. I haven't met one seller yet who's like, you know what? My neighbor has a much better home than me. I mean, every once in a while I run into that, somebody who's honest, honest with themselves. And that's just how people are proud about their property, right? That's just how it is. I understand that. But everybody thinks their home is worth more than it is. And then you list it at 550 and nobody buys it. And so they're like, oh, well, I'll just take it off the market. That's called wish pricing. I wish somebody would buy it, but if they don't, no big deal. But if you're not seeing new listings really explode, like go up exponentially, that means there's not distress. Not distress yet, because when you're distressed, you need to sell. And by the way, this whole idea that there's a lot of distressed sales that are off market, like hidden from the public, that's BS. Because if somebody needs to sell today because their economic condition warrants it, they're going to list on every site they can. They're going to drop flyers from an airplane. They're going to get one of those planes with the banner and fly it overhead. House for sale, right? Like people, the idea that it's comical. The idea that people are purposely keeping their home off the market if they need to sell and they're in distress is crazy. Does that make any sense to you guys? Maybe I'm nuts. Pending sales. Let's see what's going on. We already looked at that. Let's look at active listings. Active listings in Redfin metros. Look at this. 11.45% up year over year. My point is, like, this number should be going up a lot steeper if there was distress. If the average homeowner had to sell like in 2008, 9, 10, you would see this number go up a lot. This is what you watch out for in your market, by the way, in your school district, in your subdivision. Watch active listings, watch new listings, watch days on market. Don't watch the price. Forget that. You watch these metrics and you can kind of tell what's happening. Like right now, nationally, we are gaining some inventory, albeit slowly. We are gaining some new listings. Pending sales aren't great. Days on market is increasing slightly. So there are probably some deals out there. Are there tons of deals? No. But there's some nationally. All right. Let's see. Let's do price drops. How are those? Look at this. Active listings with a price drop. Reduced price, right? That's why I got that sign up there. Reduced price. Look at this. 6.5%. of all active listings had a price drop in the last 4 weeks. Year over year, that's up 1.7%. Not 1.7% of 100, 1.7%. So like that means that this time last year, it was what? 4.8% approximately, 4.6%. So that's up a lot more price cuts. And again, this is only over the last 4 weeks, meaning if somebody cut their price previously, that's not counted in this number. So in just the last 4 weeks, there's been 6.5% of all listings have had a price drop. And that's a 4-year high by far. Not even close. Median days on market. Let's look at this. And say, here's what I mean, right? We do have more days on market now, 43.25. They called it 43. That's a 4-year high, but like it's not incrementally, it's not like skyrocketing upwards. Let's look at the rate of change. Yeah, look at the rate of change. So this is this measures just the amount of change in that metric of median days on market. So it's not, in other words, the trajectory isn't upwards. Let's go back to active listings and look at that, the rate of change, and see what we can find. See, I find this stuff fascinating, but that's me because I'm the housing nerd. Yeah, look at the rate of change with active listings. This is the dangerous part if you're hoping, wanting, wishing, praying for a housing market crash. Like if you want a housing market crash because you want to buy, or if you just want a housing market crash because you just want to see carnage and you just don't want other people to be successful, then this is a problem for you. Like if I'm in that camp, I'm worried. Why is that? Because right now is when active listings should be going up. And they are going up slightly nationally, but look at the rate of change. The rate of change is not good. It's going down because at the beginning of the year, we were up 17% with active listings year over year. Then we were up 16%. 13%, going down. 12%, not good. Now 11.45. You need that thing to go up a lot. It's cold out here. I'm a wimp. All right. Let's do, that was interesting. Let's do new listings and look at that rate of change. I like this metric. Wow, that rate of change is all over the place. Look at that. With new listings, like we started to go up big time in the rate of change. Then we went down underneath 2022, but then we skyrocketed upwards. But look at this. 2024, look at the rate of change with new listings. 10%, right? Then 12%, 12%, 14% at one point. And now we're at 10%. Again, you need that number to go up too and stay up. Like it should be up here somewhere. If you're hoping, wishing, wanting, praying for a crash, it should be up here somewhere. By the way, I'm going to do a video on why people want a housing market crash. It probably won't get a lot of views because it's not really that headliney. But you tell me, why do you, if you want a housing market crash, why do you want one? I'm curious. Like, I'm not making fun of you. I seriously want to know, like, why do you want a housing market crash? Because you want to buy, or you just want to see carnage? Which one? Let me know. Okay, so that is new listings. Now let's do, let's see. Oh, let me show you this. Let me show you median sale price. So median sale price up 3% year over year. We know that. That's a 4-year high. Let's look at the rate of change though. See what we can find. Yeah, look at the rate of change. It's going down, different, right, than what we saw with new listings and active listings, like especially active listings. Like, so in other words, at one point we were at 4.4%, 4.04%. Now we're down all the way to 2.54%. So the year over year change of median sale price is going down. And that's what you want to see if you want price to come down, right? But again, this is like a national thing, not really locally. We'll get to that in a minute, probably here just in a couple minutes here. All right, let me see if there's anything else we should review. We got median sale price, we did that. Active listing, price drops, did price drops. Okay, let's get to some metros. So what do I have on the list? So these are requested by you, the viewer, by the way. You guys had left these in the comments at one point. I'm going to start with Columbus because I always get the request for Columbus, and I live in Columbus, or I live near Columbus, Ohio. By the way, Microsoft, right, killed the deal for the data center here in the county I live in. I live in Licking County. It's a goofy name, but that's the name of the county I live in. Microsoft killed the data center here and said that we should focus on farming. Well, we didn't need Microsoft to tell us that. That's what we've been doing. But like Microsoft was like, yeah, the demand in AI isn't really what we thought it was. We don't need the data centers, so we're going to cancel the contract, cancel the deal. It's yeah, a lot of people are freaking out about it. And a lot of realtors, to be honest with you, like locally, won't talk about it. Or that they do, they make it sound a lot better than it is, right? Like, we didn't need them anyway. Sure. Keep telling yourself that. Median sale price in Columbus, Ohio, look at this, $339,000. I mean, it's completely unsustainable for the locals here in Columbus. I mean, I talk to buyers all the time from the Columbus area who are looking to move out to the country because they're like, that's insane in Columbus. Like, why would I want to live there? Right? They can't find anything affordable. So $339 to us is expensive, not somebody in different markets, but to us, that's expensive. New listings, what are they doing in Columbus? Let's look. Columbus, Ohio, new listings. Down 1.9%. So much for that spring selling season. Again, if that's where you see the distress. If there's distress, you're going to see it with the new listings. Active listings. What are those doing? Only up 11% in Columbus. Not that much. Again, what's the rate of change? Yeah, look at the rate of change in Columbus for active listings. I mean, that's dismal. Down, 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 down. Just like national numbers. Just not great. Not great at all. All right, let's look at price drops in Columbus. Yeah, I mean, look at active listings with price drops though in the C-bus area. 5% up 1.2% year over year. That rate of change has been going up though. You can see, right? Look at the rate of change with price drops. It continues to climb. It's because there's a lot of expensive homes in Columbus that have been listed that people waited too long to list. They should have listed them, a couple years ago. And there aren't many buyers for 7-figure homes in Columbus, Ohio. There just aren't. So there's not that many buyers. I mean, even like a $700,000 or $800,000 house, the buyers are limited. And so because of that, you're going to see a lot of price drops. What you don't see are a lot of price drops on like affordable homes, unless it's like destroyed, right? It needs like a roof and windows and a foundation and everything else. And it's overpriced to begin with. Then you may see a price drop. But yeah, price drops are exploding. All right, that was the summary for Columbus. Let's look at Cleveland. Active listings. Let's start with new listings in Cleveland, Ohio. Wow, look at new listings in Cleveland. Look at that, up 21% for Cleveland, Ohio. A lot more opportunity to buy as far as new listings go. Let's look at active listings and see where they are. Active listings for Cleveland, Ohio. Well, they're up a little bit, 2.38%. That's not that great. Just not a lot of inventory for Cleveland. Pending sales. It's going up 1.6%. There was a spot. There are spots in the U.S. where pending sales are increasing. Holy cow. But for the most part, nobody's buying. For the most part. compared to what we're used to. Let's look at median sale price. Look at that, 229 grand. Yes, there are places in the U.S. where you can buy a home with a pro football team for under $300,000, for under 250, and one of them is Cleveland. That's a 4-year high on median sale price. Nuts. And look at the rate of change. Like, it started way up here. They were up 17% in median sale price, and then they kind of seesawed, now heading back up 11.95%, 12% year over year for Cleveland. Man, the median sale price there is relentless. Relentless. It's a 4-year high by far, is what it is. All right, let's do Cincinnati, the nasty natty. By the way, if you're watching this on the replay, you can find all these cities. I'll chapter them after the live is done. I will chapter them so you can find them later on the replay if you want, because we have a lot to go through, a lot of metros. Cincinnati is up, median sale price 293, up 6% year over year. So national number, we're up 2.5% median sale price. Metro or Cincinnati up 6%. The rate of change, wow, hard to even look at in that graph. So let's skip down to new listings. Look at new listings. 10.2% up year over year. Okay. So you've got some more inventory hitting the street. Is it sticking? Are you actually seeing active listings go up? You are. Look at this. Active listings up 16%. So there are a lot more opportunities in Cincinnati. I wonder if they're affordable homes. I don't know. 16.2%. But look at the rate of change in active listings, though. It's going down. Not what you want to see if you, I guess, are planning to buy a house in 2025. Better if you're thinking of selling, probably, because maybe those active listings are going to taper off. But you do have more inventory. Let's do pending sales. Yeah, look at pending sales for Cincinnati, up 8.4%. So if you're a realtor in Cincinnati, you're probably like, hey, things are good. Or better. Probably not good, but better. All right. That was Cincinnati. Now, next, let's stick in the Midwest for a second and do Indianapolis, because they were on the list of spots down for median sale price. Let's find out what's happening. Wow, look at new listings in Indianapolis, Indiana. Up 28% year over year. Jeez. A lot more new listings in Indianapolis. Active listings. Well, they are going down, but they are a 4-year high and 21%, 22%, call it. What about median sale price in Indianapolis? Look at that, down 4%. Last year, look what happened last year in Indianapolis, man. They peaked at 331 grand in the summer, but now they're just kind of going sideways. And look at the rate of change with median sale price in Indianapolis. Started at 299 at 7.12%, 7%. Then it dropped and dropped and dropped. Now it's negative. Jeez. So maybe there's a lot of discounts going on. I don't know. Let's see if price drops will tell us anything. Yeah, look at the price drops in Indy. 9.1% of all listings. That's a lot. That's a lot. Up 1.3% year over year. So must be some discounts in Indianapolis. Huh. I actually owned my first investment property in Indianapolis. My first rental property. Of all places. I didn't live there. All right. That was Indy. Let's do what I got next. I got Houston next. We're going all around the country. Houston is next. Houston, Texas. Got a comment here. Oh, I left your other comment up. I would love to be back in a home. The math just doesn't make the math just doesn't math currently. And there's a premium being paid currently supported by lower end, more affordable homes and low down payment loan programs. That's cool. Where do you live, Booger Eater? Let us know where you live. I can't remember. But it sounds like you're making the right financial decision right now for yourself. I get it. I'm curious what you're saying here. There is a premium being paid currently supported by lower end, more affordable homes and low down payment loan programs. Are you saying that there's a big demand for lower end, more affordable homes and they're priced too high? Is that what you're trying to say? Again, I'd love to know your metro, where you live, but thank you. Just your opinion. That's cool. That's what this is for, man. I want to know. I want to know what your opinion is. You could be a girl, being a booger eater. I don't know. Home frontage. I came in about 45 minutes late. You may have covered it, but isn't simply uncertainty about current and future economic condition that is throttling home buying? Yes, home frontage, right. That was what I covered at the beginning. Yes, that's a big thing. It's just like, I guess it's like buying anything else, right? Like the stock market or whatever. Uncertainty is like the death of growth, I suppose, whatever you want to call it. But you're right, home frontage, yeah. Can you do Sandusky, Ohio? Sandusky County, Ohio. Yes, Zane Myers. I will. I will do that. Let me get through Houston, and then I'll do that. If you have a metro you want me to analyze, drop it in the comments or drop it in the comments on the replay, and I'll get to it. All right. So Houston, Texas, percent of active listings with a price drop. 7.7%. Wow. Okay. Active listings. 15.75% in Houston. But look, again, right now we should be seeing that inventory build, right? Oops, that didn't work. But we're not. I mean, we're seeing more active listings in Houston, but like the rate of change is going down. So that's not like a sign that there's going to be a lot more active listings coming up, I wouldn't think. Especially if we look at new listings. How are those? And those could be going up a lot. Wow, look at new listings in Houston, Texas, up 14.4%. And, okay, so I'll have to walk back what I said earlier. Look at the rate of change with new listings. It's up a lot. Again, that rate of change is year over year. How fast is it growing or falling? It's up 14%, and that's going up. So you probably will have some more active listings in the future months, unless buying demand comes back or people take their homes off the market, which happens a lot right now. All right. For Houston, pending sales. Look at pending sales. Oh, man. Down 12%. If you're a realtor or agent, or if you make your money in the real estate market in Houston, Texas, you must be hurting bad. And by the way, if you're thinking of getting into real estate, now may be a great time if you think, maybe I want to be an agent or a realtor. Now's a good time because a lot of agents are lazy when it comes to finding business. And so I'm busy, but there are people that aren't, and they're going to quit. And when they quit, it's opportunity for you when the market comes back. 12% down year over year. Wow. What about median sale price in Houston? Look at that. Median sale price is still up 2%. It's a 4-year high in Houston. Houston, Texas, 4-year high median sale price. Okay. Jeez. All right, let's do Sandusky County, Ohio. That was a request on this live. Let's get Sandusky County. By the way, for those that don't know, and you probably don't unless you live in Ohio, Sandusky, Ohio is home of Cedar Point. And Cedar Point is the best amusement park ride-wise. It's 1 or 2 in the nation, I think. Kings Island in a way has better rides. A couple of them are rides that will never be replicated or imitated, but Cedar Point does have some great roller coasters. I've actually looked at a lot of investment deals up in Sandusky County. I just don't know the market enough to really pull a trigger. All right, down 20% with new listings in Sandusky County, Ohio. All right. So you are hurting when it comes to new listings. And what's the rate of change? That's all over the place. And you don't have that much data. So the rate of change is going to look strange. Pending sales. Let's look at that. How many homes are selling? Year over year, up 22%. All right. So you have some more folks making offers. I understand that. It is spring. But you don't have a lot of inventory, or you don't have a lot of sales, like 15 pending sales right now in the last 4 weeks. Not a lot. Not a lot of data to go on. Let's look at active listings. Active listings, how many homes are on the market? 113. That's up 7.4% year over year. Now, you have been up all year in active listings, but I guess it depends on what type of home you're looking for. But right now, it still doesn't seem like there's a ton of inventory. I can't imagine 113 listings being a lot. Median sale price, 182 grand, up 21% year over year. I mean, there's a lot of up and down when you don't have a lot of listings closing, when the sample size is really small. But nonetheless, you are up. It doesn't look like it's crashed. I'll turn my... When you're an old man like me, you get these vests that heat up to keep you warm. Yeah, I'm a wimp, I know. It's like 40 degrees. It feels a lot colder for some reason. All right, so that was Sandusky. I hope that helped. Like, just tell me let us know, what are you up to in Sandusky? What are you doing in Sandusky, Ohio? You looking for a house? You gonna sell? Looking for an investment property? What are you doing? Let us know. All right, move on to the next one. On to the next one. On to the next one. What do we got? Washington, D.C. Washington, D.C. I gotta do the Metro, D.C. Washington, D.C. metro area. Let's do new listings first. These are up a lot. Look at that in D.C. You want to see the effects of whatever's happening there? Look at that. Up and up a lot. Up 25%, 26% year over year in Washington, D.C. Wow. So a lot more inventory hitting the street. Active listings. 19.61% up in active listings. Man, I mean, you've got a lot more active inventory. And look at the rate of change. You can see plain as day. I mean, it is climbing and climbing fast. If you are thinking of buying a home in DC, you should run into some opportunities, I would think. I would think you will. What about pending sales? Are people buying there? Up 3.7% year over year. So there are some people buying in DC, some, but a lot more inventory growth, it looks like, than buying. Median sale price. But look at this. $593,000, up 5% year over year. Prices have not crashed there. Prices have not crashed in DC yet. Okay. So I probably, depending on what type of home you're buying, maybe there's more inventory for you to choose from. That would certainly help with pricing. But I think this median sale price thing is, it's fun to look at for entertainment reasons, but it's not like, it's not going to really tell you if you're getting a deal or not, because it really depends on what type of home, right? Like, for instance, I don't want to do this on all of them, but let me go back to this thing down here. And then This is this is a historical look. And then let me look at Washington, D.C. All these are counties. All right, so this tells us median sale price in Washington, D.C. historically for all properties, all types of properties. And the red line is national. So orange line, DC, red line, national. Kind of some interesting stuff to look at, right? Like we're at 559 right now in Washington, D.C. That's as of February. They're not looking at, they don't even have the March information in this chart yet. They do at the top in the weekly stuff, but not at the bottom in the monthly stuff. But the monthly gives us a historical look. But like, I mean, it's done nothing obviously except go up. Let's look at new listings there and see how those have been trending in DC. It'd be nice if this was a line graph as well. I don't think I can change that. Can I? Let me see if I can change that. No, it's not going to let me. Maybe well, hang on. It didn't like that. It did not like that when I did that. Sorry, folks. Data crash. Data crash. All right. We will abandon that and go back to Washington, D.C. I guess that didn't work. Gotta love lives, right? All right, so we did new listings. We did median sale price. We did pending sales, right, in DC. We did active listings. Let's do price drops in DC and see what we get. Wow, look at that in price drops. 5.5% up 2.3% year over year. So people are not only listing, but they're discounting homes. You know, a market that has activity will certainly it's certainly good for everybody, right? You want more comps to to pick from when you're pricing a property, and you want more choices as a buyer. Well, it's good to see that. It's good to see more active listings and new listings and all that stuff in DC. All right, we did Cleveland to Jacksonville, Florida. Jacksonville, Florida. Let's do price drops in Jacksonville. Look at that. 9.1% of all listings in the last 4 weeks had a price drop, up 2.9% year over year. All right. But this is kind of par for the course right now, right? We're seeing a lot more. Let's do new listings first. We saw a lot more price drops all over the place. New listings in Jacksonville only up 2.5%. But if we look at active listings, look at that, up 15%. So it's like, yeah, look at the rate of change again. I'm seeing this in a lot more metros, and it's not good if you're hoping, wishing, wanting for a housing market crash. Up 26% at the beginning of the year in Jacksonville with active listings. But then that rate of change kept falling, and now you're only up 15.7, and that's a 4-year high. But like, again, you're not like, that trajectory isn't like this, not up, up, up. It's almost like the houses that are there, maybe not moving, but a lot of people are like, I'm not going to sell right now. I don't, for whatever reason, and they don't need to sell probably. Again, you would see a lot more distress with new listings. Let's go back to new listings in Jacksonville. Look at that, up 2.5%, and look at the rate of change. It's kind of like, I mean, it went down significantly early in the year, then back up, now sideways. So it's not headed straight up. It tells me there's not a lot of distress there. There's not a lot of need to sell. There's probably a lot of want to sell. And if you want a deal, that's not what you need. You want need to sell. That's what you're after. You want to find sellers that need to sell. That's when you'll get a deal. That's when you'll get a deal. Median sale price in Jacksonville, down 3%. Well, we found a metro that's down year over year. How about that? I mean, back in 2024, that number was 9%, up at 380 grand. And by the way, Jacksonville peaked. Oops, sorry. Jacksonville peaked at $390,000. Oops, I'm sorry. Jacksonville peaked. Is that 390? Yeah, 390. Yeah, they peaked at $390,000 in Jacksonville. That was at 5.5% up year over year last summer, but now they're at 367. They may ride that. So like a place like Jacksonville, you could say, I mean, prices haven't crashed by any means, but they're definitely off from the peak. They're off from this time last year. So there are places where prices are down. It's just not widespread. I think it's 42 of the top 300 metros have year-over-year price decline, is what I read a few days ago. All right. That's Jacksonville. What's next? Orlando is next. Somebody wanted Orlando. I got some viewers from Orlando that are always asking for Orlando. Orlando, Florida. Let's do new listings first. Oh, no. Only up 4.2% in Orlando. Now what you want to see, and look at it sideways. It's been sideways all, for the last few months. Again, not what you want to see if you're hoping for a crash. Look at the rate of change in Orlando. It's going down now, unfortunately. Yikes. I'm surprised. I thought there'd be a lot more active inventory, or I'm sorry, a lot more new listings. Not seeing that. What about active inventory? It's almost up 30%, up 27%. The rate of change, though, is now heading down because those new listings are heading down. So I don't know, like, is now the time to buy in Orlando if you want a house in the next year? I mean, it doesn't seem like inventory is really skyrocketing now. It seems like there's a lot of dead inventory. So you could find a deal on some dead inventory. Somebody who's had their house listed, then relisted again. I mean, look at the price drops. 8.3% of all listings in the last 4 weeks. That's up 1.4% year over year. And the price drop, look at the rate of change on price drops. Look at it go up and up and up. Oops, that's not it. I mean, it's just boom, 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 upwards with price drops. Man, this thing's giving me fits. There we go. Yeah, look at that. I mean, a lot more people cutting prices, but but the inventory isn't going up anymore. So that would tell me there's a lot of dead wish pricing, like maybe some like Airbnbs or some rentals where people got over their skis on rentals or Airbnbs, and they're like, you know what, I'm just going to sell this home, but they overpaid for the house and Airbnb didn't work for them. So now they're like, oh, well, I'll try to sell it, but if I can't sell it, I'll just hang on to it and just try again next year. Because there's not a lot more. I mean, the inventory isn't exploding anymore, but you have price drops. Did we already do median sale price? Yeah, I think we already did. Yeah, we did median sale price. Okay, let's see. What's next is Nashville. Nashville, Tennessee. Look at the price drops in Nashville, just like everywhere else. A lot of price drops, up 5.3%, or it is 5.3%. It's up 1.2%. I guess basically that's almost like a 20% gain. I wish they presented that differently. Kind of confusing. New listings. What are they? Well, look at the new listings, up 10%. Okay. So more new listings in Nashville. Let's look at active listings. What do we got there? Active listings in Nashville, up 16%. What's the rate of change? Kind of flat. Down slightly, kind of flat. I mean, they started the year at 16% up year over year. Now they're at 16%. So you kind of held steady on adding more active listings. But you must be, are you selling anything? You were. Look at that. Yeah, like, so you, I mean, it's easy to see like these pending sales were headed up in Nashville. Now they're starting to dip slightly, but it was heading up, meaning the rate of change was heading up right here. The rate of change was up. And so then you saw that active listing count kind of stagnate. All right, median sale price. 466 flat right now. Down very, very slightly, but basically flat. They peaked in Nashville here at 479. In Nashville, median sale price ended at 458 last year. And they started this year at 450. And now 466. So it doesn't seem like it's crashing there as far as median sale price. Here, let's find a market that is down significantly in median sale price. Or let's find one that's kind of down. Somebody always asks about Denver. Well, look at median sale price in Denver is actually up 1%, 497. I'm sorry, 597. And it's starting to go back up. Let's look at new listings in Denver. Wow. What? Okay. 44%. Can that be right? New listings in Denver, Colorado up 44%. I don't think they made the top list on Redfin. I don't know why. Look at the rate of change with new listings in Denver. I mean, this tells me that there may be some distress there. Just by looking at these charts. I don't live there. I don't know anybody in Denver that's a realtor necessarily that I'm close to. But if you live in Denver, let me know. I mean, this is like scary. If you're getting ready to sell a property in Denver, you better price that thing right. I mean, you've got things are skyrocketing there as far as inventory, it looks like. What about active listings? What are they doing? Yeah, look at active listings in Denver. So this, like, again, I know this is like really nerdy stuff, but this is the housing nerd, so whatever. Like, if you look at that rate of change, you can see how it's increasing in Denver with active listings versus an area like, well, even like Houston. The active listing rate of change, if I remember right, was going down, meaning that the year-over-year increase was shrinking, not increasing. But in Denver, look, I mean, you started the year up 34% in active listings, but then it just kept climbing to now up 57% increase year-over-year in active listings. I mean, that, folks, shows me there is some probably like need to sell. Like, I need to sell my home. Wow. Man, I wonder what's going on in Denver. It's got to be a lot of new construction. Maybe just overpriced. I don't know, but man, there's a lot more active listings there. Jeez. Okay. Price drops. We already look at that. Price drops 9.3%. Let's look at median days on market. 21 days, median days on market. Huh. Not on, I mean, I thought it would be a lot higher. Okay. Median sale price. We did that, I think, right? 597. Wow. Well, pending sales. Did we look at this? Pending sales are up 17%. Jeez. And look at the rate of change with pending sales. Again, look at that. They were down 12% year over year at one point in Denver. Now they're up 17.7% with pending sales. So Denver, you've got a ton more new listings. You have a lot more active listings than last year. And you have more pending sales. So like, and I would think that's going to be the case as you see more and more active inventory and new listings hit the market with people that maybe need to sell, not want to sell. You're then going to see people pile in, I think, who can afford those homes because they're like, oh, they can smell blood in the water and they're ready to buy. I mean, isn't that, if you're waiting for discounts on houses, isn't that what you're waiting on? Or are you just hoping there's like carnage in the housing market and you're not going to buy a home, which is fine. Some people just like to see carnage. Wow. Man, Denver's crazy. That may be one of the most unhinged markets out there right now. All right. Who else? Any other markets anybody wants to see? Let's find out. Oh, we got some other people on here. Oh boy, I'm behind here. I've been babbling too much. In Connecticut and are in the market to buy, but sellers are all wanting to retire on our purchase. Mike Villette. Is that how you say it? Mike Villette. Did I say it right? Then Justin says, Connecticut market seems crazy right now. Let's look at Connecticut. Let's look at Connecticut because I did see them pop into the list of new listings. Month over month. Where in Connecticut should I go? You tell me, Mike. Where in Connecticut should I go? Hartford? You tell me. I'll go look at some of these other comments real quick, and then you can tell me. We got a buyer, Jack Rory, Staunton. Hey, Jason, I'm a buyer in DC. Oh, okay, cool. Well, let us know. Like, are you finding deals? Are you seeing a lot of inventory? Like, I don't know if you saw my review on DC, but like, is that something, does it match? A lot of new listings, it looks like, a lot of active listings. Are prices coming down at all? I'd like to know. Oh, Zane. Okay, yeah, in Sandusky. Looking for a first home for me and for wife and I. Just passed on a 1,000 square foot house for 200. It was nice property though. Just just didn't meet your budget or what? Why'd you pass on it? I'd like to know. Well, good. I'm glad you guys are out there looking. Be patient. If you can, be patient, Zane. Patience in real estate is valuable. Almost every bad deal I've done, like investment wise, was because I bought too fast. Like I saw the deal and I pulled the trigger too fast. I wasn't near patient enough. I'm seeing houses in 2001. Oh, those are zip codes? Oh, okay. Yeah, I can't get zip codes on this, unfortunately. I wish I could, but I can't. I can only get counties and like metros on Redfin. Anywhere from 650 to 1.2. Okay. I've been watching from sidelines for years. The decent prices are still very few and far between. Gonna wait until there's blood in the water. Good for you. Good for you to be patient. And there's nothing wrong with making disrespectful offers. Like, I don't know how you're operating or what you're doing, Jack, like with, a realtor or you're buying by yourself, however you want to do it. But like, there's nothing wrong with just going on the market and saying, well, let me find the homes that have been listed for a long time, if there are any, or homes that are destroyed, if you're willing to do that work. And then, or even not, even if they're homes that are in good shape, and then just make disrespectful offers. Like, it doesn't cost you anything to make an offer, and your agent should be 100% willing to make those offers for you. That's their job. So, work your agent. Like, send an offer in every week on a house. And if the seller doesn't like it, oh well, move on. What's up, Steve? How you doing? Brutal in the rate game so far this morning. We've had a 60 basis point jump in the 10-year since Monday morning. Right. Yeah, Steve's a good guy, local mortgage professional in Columbus. So if you're looking for a mortgage, you could reach out to Steve. He does all kinds of loans, investment loans, everything else. And we've talked about some refis. I guess I should have locked the rates in, Steve, when they were at 6.5, 6.6. But I waited. Now they're back up. No soup for me. Volatility from tariffs probably scares sellers into selling and buyers into waiting. Yeah, you're probably right. Hey, man, it'd be awesome if you could, in the next video, do Seneca County, New York. I can do that today. I'll do that here after I'm done, or after I'm done with Connecticut. And then, all right, Justin says Windham County in Connecticut. All right, I'll do that next. And then let me just pull up Zane's comment. It seemed expensive for how small it was. Oh, the house you looked at. I hear you on being patient. Offers were due 4 days after it went on market. Yeah. So like, if that's the house you want, Zane, you want it. Sounds like a great house. If you want a move-in ready house on the perfect street and it's something other buyers are going after, fine. Like that is what you want. If it is what you want, it's what you want. But if you can be patient and find something that others aren't looking at that much, that may be the way to get a deal. In other words, somebody who, and look at a property that has been listed and then relisted. The other thing I'd consider, depending on your situation, especially there in Sandusky, is maybe a duplex, like maybe a multifamily, like a 2, 3, or 4 unit building you can live in as an owner occupant, rent out the other units and get favorable treatment with FHA and financing. Like that's something you can do. And so because FHA and mortgage companies will treat that as a primary residence, even if you're renting out the other units. And to offset your mortgage, that may be a way to do it. And it's also a great way to build wealth in real estate. It's something I wish I did when I was younger. I never got to. Not that I didn't get to. That's a stupid way to say it. I didn't know enough to know that that's what I should do. But if I could spin back the space-time continuum, get in the DeLorean and drive backwards into the past, I would definitely buy a duplex, live in one side, rent out the other. And it'd be a huge win for my future. But that's just an idea. Not saying you want to do that or you should, but just something to think about. I love these statistics. Thank you, Jason. Hey, you're welcome, Steve. You're welcome. Thank you. Thank you for watching and participating. I appreciate it. And thanks for joining me on, I think you're on, oh, you were on Facebook. Oh, is this the same guy? Is this the same Steve? Because I see you on Facebook commenting. Then I also see you on YouTube commenting. Hopefully you're on the YouTube one, because the Facebook one's kind of lame. But that's just my opinion. Appreciate you, man. Oh, yeah, thanks, Dan. I appreciate your support. Multi-unit is definitely one you should start with if you want to get in the real estate game. I agree. Oh, yeah. Yes, same one. Yes, Steve. Yeah, I agree, Steve. Like, this is to anybody, Zane or whoever out there. If you can do it, if you're flexible with your family situation, like, you know, if you've got kids in a certain school district or you've got a bunch of kids or you're like, feasibly, I don't want to be a landlord. I understand that. But don't push it away just because of what you've heard, like the horror stories you hear. Don't push it away because of that. If you can buy a duplex or a multifamily, a small multifamily, 2 to 4 unit, man, early in your life, that'll pay off exponentially down the road if you manage it right. And of course, you have to buy it right? You don't want to overpay. But instead of paying $2,800 or $2,500 or $3,000 a month or $4,000 a month for your primary home, buy one that you're paying $4,000 a month for, but you got 2 other tenants in there or 1 other tenant or whatever, you know, paying 30, 40, 50% or even all of it. I love watching your breakdowns because you relate to the Ohio market. I've been watching the area for over a year. The market is tight at 200K, but anything over 300 has started to since about January. Interesting. Well, thanks, Zane. I appreciate your support. And yeah, I've considered coming up with another channel, actually. Just Ohio. In fact, this channel started out as Ohio Real Estate, and I changed the name because it obviously wasn't getting pulled into the algorithm at all. Not that it is anyway right now anyway, but it wasn't until I really changed the name from Ohio Real Estate to Housing Nerd. So I'm thinking about coming up with another channel that's just Ohio Real Estate, but you know, there's only so many hours in the day. All right, let me go back here. Enough babbling. I'm going to go back and help my buddy here in Justin in Connecticut. Because we had a guy we had Justin, then we had Mike Villette as well. So I don't know, Mike, if you want to see another area in Connecticut, I'll pull it up. But Justin wanted Windham County, Connecticut. Yeah, I'm really curious on what's happening with Windham County, because like Connecticut is just, again, I just saw them on the year-over-year list for for realtor.com data. When I looked at that data, I saw them on the year-over-year list of metros with the largest increase month over month for new listings. And so that's why I think that'll be important to look at. Let's see. ND. Windham County, Connecticut. What do we see here? Well, in Windham County, you've got new listings down 26%. Now, there's only 22 new listings that's picking up. So there aren't a ton of new listings to go on, but those are down 26% year over year. That's not good if you want more inventory. Active listings. Oh boy. Well, down 12.47% in active inventory. Anybody watching this now or on the replay, you should, like, when you see a market like this, realize that all markets are different, because there are markets where inventory in Denver is up 56%. Then there are markets like in Windham County, Connecticut, where you're down 12% in active listings. Man, I feel for people there, man. I don't know how. It's you know, I don't even live there, and it's depressing for me to understand that there's no inventory. Pending sales. Pending sales down 1.7%. What else we got? Median sale price. Geez, 347, up 9% in the county. Oh man. And that shows there's like no relief there. You don't have any listings. You have no active listings. At least I don't see any on here. But you tell me what you're seeing. Let me look. Let me see if there. Let's see. Let's look at Metro. Let me look at. Let me look at Hartford, Connecticut. Yeah, median sale price in Hartford, Connecticut, up 6%. But let me look at new listings in Hartford. Huh, look at that. New listings down 3.1% year over year. I swear they were on the top list when I looked at it on realtor.com data. Must not be Hartford. Active listings down 8% in Hartford, Connecticut. Man, there's just no, the Northeast is brutal on the housing market. I'm not going to give up, though. I'm going to look at another market here in Connecticut. I'm kind of curious. New Haven? You know what? Let me look at, let me do this. Let's see, anybody have one? Let's do Boston. That was on the list. I know Boston was on the list. Yeah. So I saw in Boston. Okay, so Boston's up 8.5% year over year in new listings. I thought that was interesting. So there are maybe some more new listings hitting the street in Boston to help people find a home. But how's active inventory? Only up 2.27%. And the rate of change is going up, but it's not skyrocketing. Maybe because realtor.com pulled, maybe because they pulled a month, just the month of February. No, that was March data. It was March data I looked at. I'm going to have to go back and examine that. Anyway, it's just something I'll have to figure out myself. But it doesn't look like Connecticut's doing any, this seems like it's still really struggling. I feel bad for folks up there in the Northeast. There's no new building. There's not a lot of new building here in the Midwest, by the way, which is surprising. In Columbus, our new building's horrible. There's nothing. But maybe we don't need it now that Microsoft ran away and Intel is slow playing their plant. All right, let me do the next metro. I've got a few more to do unless people have more suggestions. Oh, somebody wanted Seneca County, New York. I remember that. Seneca County, New York. Where is Seneca County? Let me look. Oh, okay. So it's like southeast of Rochester, kind of near Syracuse in a way, between Rochester and Syracuse, right? All right. I was just kind of curious where it was. Let's do new listings in Rochester County, not Rochester County, Seneca County. Well, there's not a whole lot going on there. Not a whole lot of listings. They're only picking up 7. Geez. So that's up 100% year over year. That's not a great stat to look at with the few active listings or a few new listings. Wow. So you've got 39 active listings, but you're up 73% year over year. So I don't know. It just doesn't seem like a lot of homes there for sale. Look at the rate of change. Wow. Like it's up, 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 up we go. So you are adding active inventory, but there's not a lot of homes for sale. I don't know if that's normal or not to only have 39 homes for sale. Oops. Sorry about that. Okay. Let's look at median sale price. Boy, this is all over the place. Oops, that's new listing median sale price. Median sale price in Seneca, New York. Seneca County. Down 10%. So it is lower median sale price. Is this right? Wow, 159 grand? Is that how much homes are there? Well, I mean, you started at 304, but now it's dropped all the way to 159. But that's just, there's not a lot of sample size. That's the problem you're running into in this data. So I'm not sure how helpful this would be for you, just because there's not a big sample size. You definitely, I guess, depends on what type of asset you're looking for, but I would definitely get with a local realtor, and I don't know if you're working with one or not, but ask them for this data. Ask them for days on market historically, like monthly days on market for the type of home you want to buy and the price point you want to buy it in and the area you want to buy it in. Days on market, new listings, historically new listings and active listings, and also months of supply. You want to ask them for those data points, but have them go back a few years and get you that data so that you can understand historically what's happened and then be able to figure out maybe where things are trending. But right now it looks like, I guess if we go back to active listings here, maybe we can find a trend. Maybe a little hard. Like again, you only have 39. So it says you're up 73%, but we only have 39 listings. If you add 10, that's a big change, right? So I'm not sure this was very helpful. Sorry about that. But again, you could even use Zillow. Pretty much you can use Zillow, although now with the changes that they're making with National Association of Realtors and the battle they're in with Zillow, I'm not sure how great that data will be, but it would, at least then you would know what's happening on the street, right? You could look at Zillow and say, all right, how many houses are listed today? Then look tomorrow. How many houses are listed? Then the next day, how many houses are listed, and then track it. And you'll start to see what a trend emerge. But you can't go back with Zillow. That's the problem. You can't really look historically and look at new listings. So that may have just been a waste of time. Sorry about that. Yeah, around Rochester. So maybe, you know what? Let me try this. Let me look at Rochester. Let's do that. Would that help maybe? Because what? Yeah, let's look at Rochester and see what we can find. Maybe this will help kind of tell you what's going on, at least in Rochester, give you some bigger sample size. Yeah, so you got 237 homes for sale or new listings, so that helps. So 237 new listings in Rochester, up 30%, so definitely more active or more new listings hitting the street. I always say active, but more new listings coming to market. Active inventory in Rochester, look at that. Yikes. Down 7.6%. So they need the new listings there. All right, let's look at pending sales. Pending sales up 12.7%. So more people buying, more new listings, but less active listings probably means people are buying in Rochester. Somewhat. I mean, that's a pretty big growth of pending sales compared to other areas of the U.S. Be interesting to look at. I don't know if this will tell us anything, but let's look at price drops. Yeah, well, this is, I'm not surprised to see this. Price drops only 2.5. It just seems like, from what I've seen in Rochester, you've got new listings going up, but then you've got pending sales also going up, and that's why maybe active listings are coming off the market, and people aren't discounting their home as much because they don't have to, perhaps. Perhaps. Yeah, look at median days on market. Barely up compared to last year. In other words, homes are selling basically how much for as fast as they did last year and the year before and the year before. But you tell me if that's what you're seeing, but it doesn't seem like there's a lot of hope for massive price declines. Median sale price, not surprised, 239, up 8% year over year. Real quick, I'm going to look at Syracuse. Because Syracuse has a Micron plant, right? Isn't a Micron plant coming there, or it's being built or was built, kind of like here in Ohio where you've got Intel. So just kind of curious on what's happening in Syracuse. Syracuse, New York, up 2.8% in new listings. Not that many. Active listings. I apologize for the sniffling. It's cold out here. Down 15% in active listings, just like Rochester. Not a lot. Not a lot of active inventory. Pending sales, what do we got there? Down 9.4%. Go back to new listings here. So I guess you have a little more new listings. There are somewhat of a gain there, but then the active listings are not good in Syracuse. And then pending sales, they are going up. I mean, the rate of change, I'm sure, is up somewhat. The rate of change is going up. Down at one point, pending sales, you were down 30%. In Syracuse, now you're down 9%. But what about median sale price? Median sale price up, up 10%, $217,000. It just doesn't seem like in Syracuse or Rochester there's that much inventory. Just doesn't seem that way. I thought I'd find more, but I guess not. Inventory has been hard to come by so far of the last 2 or 3 years. I think of that maybe normal. I think that, inventory overall in the U.S. has been horrible. In fact, if you go before COVID, it's weird that a lot of people think like before COVID, the housing market was going to crash, like before COVID was announced. But if you go back to 2017, 2018, 2019, inventory in the U.S. was trending down. Overall was trending down. and prices were heading up before COVID. So, because I remember watching, the first person I ever watched on YouTube with real estate was Reventure Consulting. And I remember, like, before COVID, he was like, hey, you know, we're doomed. Like, the market's crashing. And I was like, really? Huh. Maybe I shouldn't have got into real estate. And obviously it didn't crash, but I don't know. It's inventory has definitely been going down all over the place for a long time. Now it's going up, but we were so far in the basement that it's going to take a lot to get it to be at a level that makes any sense. I mean, during the GFC at one point, we had like 4.1 million homes for sale. 4.1 million homes for sale. Now we've got less than a million. So you've got to have a lot more inventory to cause any type of distress. Now, there are areas where you're seeing that. You're seeing that, like in Denver, you're probably going to see some distress, maybe in Florida, Austin, some parts like that, you're seeing distress. But in the United States overall, if you combined all the numbers, you need a lot more inventory to cause any type of widespread cataclysmic housing market crash, at least in my opinion. And people are locked up, right? I mean, somebody just said it, right? Somebody said it. They said, who was it? This is like the comment of the day, maybe. Volatility from tariffs probably scares sellers into selling and buyers into waiting. I think that's happening. I think there's a lot of fear, right? There's just not enough scared sellers or need to sell sellers that are actually going to sell and put it on the market and price it to a point that people will buy it. Like, if interest rates and prices come down enough, people will buy. There's always a point at which people will buy. And I think overall, there's a lot of folks out there that predict that there's going to be a point at which home prices crash. You tell me what you think. Home prices crash, interest rates crash, but nobody wants to buy except them. Like, they're going to be the only one that's in the know. Like, I like people that have been waiting like 5 years. And my suspicion is some of these people don't even really want to buy a home. They just like to see carnage. But if interest rates drop that much and prices drop that much, somebody's going to buy. And last time, the people that bought were investors, right? Wall Street came in and was like, man, these things are on sale. Time to buy. Don't you think that's going to happen again? If prices and interest rates get low enough? I mean, it's only going to happen so long where interest rates are unbelievable. Like, what if interest rates right now were 4% and prices were down 40%? Don't you think somebody would buy a house? I would. I'd find a way to buy at that price and that interest rate. You better believe it. But I mean, the idea that that's all going to happen at the same time is, and just stay that way for anybody to be able to buy a house, and the investors are just going to stay away. They're just going to go, I don't want any profit. I don't know. That seems like a pipe dream to me. Micron. Yeah, Micron is supposed to be building, but it's been really, really slow process. Hey, welcome to the party. That's the same thing that's happening here in Columbus with Intel. I mean, Intel was supposed to be making chips now in 2025, today in 2025. No, they're not. The plant's not even close to finished. It's not going to be done till 2031. And when someone tells you 2031, what they really mean is 2035 or 2040 or never. That's what they really mean. The new CEO of Intel spoke recently about their foundry division, and it was clear that the Intel One project here, I mean, I live like 10 minutes from it. I could be at the site in 10 minutes from here. It's clear that is not a priority for Intel. It's clear as day when you listen to him speak. So he may sell that division to like Taiwan Semiconductor, which would not surprise me. Maybe Micron will do the same thing. But man, everybody here already built in all the prices for Intel. That's already been baked into all the real estate. So if that doesn't come through, you probably will see some softening, I would think, in demand here in Columbus. But Columbus was already increasing before that because it's an inexpensive and it's quite frankly a good place to live. So I think that Intel is not done us really any favors. It's just caused a lot of market confusion, and you got to feel for the people that live near the plant because it's not a great place to be. I wouldn't think. Tons of dust, noise, grime. You know, light. They have these lights that are at the facility all the time, and it looks like the Death Star. It's like just lit up, and it's all this country farmland for miles, and then all of a sudden it's like boom. It's like Field of Dreams. If you ever watch Field of Dreams, the guy's driving, all of a sudden there's this big light. That's the way it is. Who wants to live near that? Nobody. Anyway, enough about Intel. All right, man, I've been on for an hour and 50 minutes, and I got to go show some houses, so I got to take off. But you guys have been fantastic. Thank you so much. If you have a metro you want me to analyze again, drop it in the comments. I'll do it on the next live or on the next Redfin update. And I got a lot of videos in the hopper, so you should see a lot next week from the Housing Nerd. And again, thanks so much. You have a great day. Be patient in real estate. Don't rush it. Make disrespectful offers. And do things others are unwilling to do. And you should probably win. All right, I'm the Housing Nerd, and I'm out. Have a good one.